good afternoon, everyone, on May the 29th. Wow, it's almost June and we're still doing personal taxes.
Yes, we are.
That's crazy.
Yeah.
This is the last Friday of personal tax season. If you haven't done your personal taxes, they're due Monday. Spend the weekend doing them and getting them out the door. But, this is an interesting week. There hasn't been much to discuss new that's been released this week through the Government of Canada or provincially, in fact, related to the COVID. So we're going to highlight a few things this week. And of course, I forgot Eric. Eric Ma's here with me, John Gallo, for today's coffee chat. And then we'll open it up for any questions, and we'll go from there. How does that sound?
That sounds pretty good. So like you said, this week hasn't had too much going on, but there's a couple things that are kind of nice. First thing we have is the seniors benefit that was released sometime this week, midweek, I think it was. And that is seniors who are eligible for OAS and the GIS, the Guaranteed Income Supplement, qualify for a new benefit of up to $500. They get $300 if you qualify for OAS. That's not to say that it has been or has not been clawed back. That's only if you qualify. So if you received the money at all, you qualify for $300. If you qualify for the GIS, you also get $200. Now, you don't have to apply for any of this stuff. It all gets automatically deposited into your account.
Like magic.
Just like magic. Exactly. Or if you don't have direct deposit set up, as many people don't, you will get a check. So that's kind of the first thing.
That's an interesting point because many people, this isn't necessarily COVID related, but certainly a lot of conversations we have with older clients about OAS, they go, John, I'm still working or I have a lot of investment income. Should I apply for my OAS knowing that it starts to get clawed back at $79,000? And I always say, apply for it. It's your entitlement. If it's going to be taken back from you because your income is too high, that's fine because it's an income supplement. But this is an example where, some people don't listen to me. They don't want to apply for it. They say, I don't need it. Or it's just going to get clawed back anyways. Well, this is an example where, this benefit isn't going to get clawed back. And then I think an interesting thing, tying it back to COVID-19, or COVID anyways, since we're 2020, is that if there's a second wave, or God forbid something else happens, we could expect the government to act in the exact same way in the future. So if you haven't applied for these benefits, because it's going to get clawed back, this is probably a good time to apply for it because you don't know what the next situation is going to be, right? It's a second wave or COVID 2020 or 2021 or whatever is going to come.
Exactly, for sure, definitely. That's a great point. So that was the only, I guess, quote unquote, new benefit that was released this week. Like I said, that should be around June when people should see that money come in. The second thing is T2, T3 deadline has been extended for any companies that have a filing deadline in June, July, or August.
Oh, wow.
Yeah, so that's 3 months of new deadlines that have now been pushed to September 1st. So if you have your filing deadline in any of those 3 months, you now get to file by September 1st.
So that means our August is going to be quite busy then.
Yeah, definitely, for sure.
Wow.
Yeah.
My thoughts on that, certainly if I think, we've had a few of our clients that have been, stuck overseas, mostly in the US and in their winter houses that they couldn't get back up to Canada to do some of that paperwork. But I would say if you're here, I think you should be keeping the same deadlines because particularly if it's a business, we're talking T2s, T3s, generally, which are related to businesses, is that, you have an automatic business rhythm. And when we start comparing, year-over-year results, or even, if your year end is call it February, or January, February, and you have to, it falls within these 3 months for their deadlines, and you wait, then really what you're doing is you're delaying the sort of the analysis of what do you do going forward in a increased cost environment, reduced profit margin environment, and decreased sales or traffic, right? And those are important conversations for us to have, with each other and sort of with courses of action. So by kicking the reporting periods down the line, you're not, arguably, you're not facing the hard truths about how do you operate now, right? We've seen we've seen some real I don't know if anyone's been to the mall, right? West Edmonton Mall, and when you park, they got these curbside pickups now at the mall. Now you got what, a 20-block mall, and you got curbside pickups presumably in other places. I saw it by the bay, and this is obviously the mall trying to adapt for its customers inside so they can service the retail.
Mm-hmm.
But I would argue that if curbside isn't working at a big mall like that, maybe you need to do other things, and you need to face those decisions earlier, right? So I would certainly say kicking, notwithstanding not being able to get out or you're ill, kicking those sorts of things, those decisions down the calendar is probably not the best thing from a business perspective. But yeah, interesting. We're pushing this stuff all the way up to the fall, and I also think there's a mentality issue. We're still if everything's working well and we're opening up the economy and we're kicking all this reporting down to the fall, we're almost reliving the trauma again, which I think is really unhealthy from a mentality perspective.
Sure, definitely, 100%.
I think we got someone else.
Sorry, we do, yeah.
Yeah.
Let me just add them in. Perfect. All right, yeah. So that is a new thing. Like we said, June, July, August. If you have filing deadlines in that period, you now have a extension to September 1st to file. The next thing that we want to talk about is the temporary wage subsidy. Now, this hasn't really changed too much, but I personally have been getting a number of questions about this specific subsidy, specifically around two things. Number one, the deadline, or like it's the end of the period, simply because it kind of correlates to the 75% wage subsidy, but the deadlines now have not really lined up. So the temporary wage subsidy now, the deadline or the end of the period is June 19th. So that means, we have March 18th is the beginning of the temporary wage subsidy, and then June 19th is the end of that subsidy. Having said that, the next thing is there was some, I guess not necessarily confusion, but a little bit of a gray area around the reporting.
Yeah.
How that was going to turn out and what that's going to look like at the end of the year. So right now on the government website, it basically says that after June 19th, anyone who used this benefit will be required to self-report, which there will be a form available online, but right now there is no form available. So we basically just have to hang tight on that.
Yeah, and if people ask, they're concerned about not reporting penalties and stuff like that. I think people have to remember about the 10%. It's really tied to remittances, and remittances are always reconciled at the end of the calendar year. So I wouldn't expect, quite frankly, CRA. There's another person who wants to come in. I wouldn't expect CRA to develop any sort of reconciliation for that 10%, at least until the end of third quarter, maybe begin of fourth quarter 2020, and it most likely will have to be remitted, I would suspect, in February 2021 in coordination with the T4 filings that are due by February 28th of 2021. So if you're worried about the 10% reconciliation, don't be. I don't think it's going to come out in a surprise sort of thing. I think the forms will probably come out late fall, and they'll need to be required to be remitted or submitted, probably electronically, and that's probably going to be part of the delay with your T4s, and reconciling it that way to the extent where if you hadn't taken 10%, you'll probably get a refund on your T4s at a corporate level anyways. I think that's how it's going to work.
For sure, definitely. I think that is definitely in line with it. There will be a lot of difficulty with them reconciling immediately after. So like you said, at minimum, it's going to take time for number one, for them to even figure out how they're going to reconcile it properly, and the different types of documentation. They have not released a worksheet or anything, just like or similar to what they did for the 75% wage subsidy that would show how you should be getting these numbers. So I can imagine that it's going to be a lot more difficult than even the Qs, because that one they've already provided, and for them that will be more straightforward. But having said that, the last thing I want to talk about for the TWSE, or the 10% wage subsidy, is just recently, not this week, but I believe it was last week, they released the ability for the business owner to elect how much of the TWSE that they're actually claiming on their remittances, between 0 and 10%. What that basically means is some people are you are allowed to use the 75% wage subsidy, but part of that 75% wage subsidy is the 10%.
Yeah.
And it was confusing as to, how, like, do I take the 10% off? Is it on top? They have basically said it is included in that 75%, but you can take the 10% off and then take it off your remittance, or you can just take the full 75%, which is where the whole self-identification form comes in and requiring you to reconcile all those differences and stuff like that. So that's an important thing to know. If you don't take it off your remittance, it is included in your 75%.
So there's going to be, I think, a lot of, and the 10% will end in June, but the wage, the CUs will continue all the way to the end of August. So I think there's going to be some reconciliation, some work to be getting to be done. And none of it has to be done right away. You can always apply it up to the CUs up to the end of October. But before you submit, certainly make sure it's accurate and go from there.
Definitely, for sure. And that kind of leads us into one of the last things that we wanted to talk about is the CEWS benefit. We're just approaching the end of the third period, which is the last of the original 3 periods that they had released. We end June 6th. That is the last period until the extended period, which, again, they haven't released any information yet as to how they're going to be determining any new qualifications that they're looking at. So for now, this is the last period for the 30% drop. And if you're looking at moving forward into the next periods, use the 30% drop still.
I think, and I had mentioned it last week, that they are going to do some sort of proration as we tailor off into August, particularly as the economy starts back up again. I've told people, certainly clients, around the CUs, around when to apply for it, the day it opens up for the next period. That's fine as long as you have your numbers correct. If you're a business where you're still finishing off your month end around invoicing and determining you're at that 30%, I'd argue that it's better to wait. Make sure you close your month out and your invoicing, your revenue numbers are accurate. Then apply for the C. So there's no rush certainly there's a cash flow issue for sure, but hopefully you've gotten the CEWS the month prior now, which is helping with the cash flow, and then get the numbers right for the subsequent period. Because I think what you don't want to be doing is, A, you can't amend, and B, if you try to add it on to the next month, I think you're asking for trouble, even though the total amount would be accurate. I think you're asking for trouble if you try to double up for something you missed. And certainly the legislation doesn't allow for that. However, I've heard that maybe some people are thinking of doing that if they felt they made a mistake on it.
Definitely.
I've got a lot, and there's nothing new about the next topic I want to talk about, but lots of questions came out this week because the rent subsidy announcements were done on Friday of last week, and we addressed it in our last Friday's coffee chat. But there's been a whole lot of questions around rent subsidy I've got. And I want to address a couple of them. The first one is, for clients that have very cyclical businesses or big lump businesses, for example, home builders is a good example where, they looked at last 1 month last year and 1 month this year, and, they had a sale this year, but they hadn't had a sale for the last 7 months or something like that. It really affects their ability to apply for rent subsidy. And currently, the way the rent subsidy works right now, it is based on the month threshold. If you don't have that 70% drop, you cannot apply. So that's problematic. And what we're unfortunately, conversations that come from that is how do you play the game, right? Which is really disappointing because that's not the intent of the program. But it's very strict. The guidelines are very strict. We've had very few clients that actually apply for it with their landlords, or landlords apply for it as of yet. Now it's only been open for a week, but I haven't heard much positive come back from it. What I have heard is things like landlords are asking for a bunch of information. They'll make their decisions once they get that information, and most of them won't apply at least till June, mid-June, so that they know exactly. Because once you apply for a property, you've applied for the property for the whole time. So that's very frustrating for a lot of tenants. That's what we're hearing right now on the rent subsidy. Any questions so far on what we've talked about? Please just ask them, or we'll unmute you and throw them at us, and we'd be more than happy to answer those questions. The last thing that I do want to talk about is the SEBA, because it did change last week, and I don't think the messages got out as well as it could have. For a lot of reasons. One, I thought the banks would be much more proactive, kind of pushing out to their customer base that the rules have expanded. CRA has expanded, has certainly put the Government of Canada website has added the additional criteria for the SEBA, but the banks are still quite slow in updating their websites, which is unfortunate. So just want to remind everyone out there that the rules have been expanded to help people like sole proprietors. If you don't have wages or you pay yourself as a dividend, as long as you have the expenses, which is about $40,000 to $1.5 million, you can apply for it. And it's a great program. $40,000, 10% is forgivable if you pay back $30,000 by December 2021. Some people have asked us about how do you pay it back. We don't know yet. We haven't seen that. I suspect that's going to be through your bank. So probably the conversation around the bank, but I don't think anyone's super keen to have gotten the SEBA about 8 weeks ago or 6 weeks ago and pay it back today. So we're not seeing anyone pay it back, but I'm sure more information will come out about how to pay it back, and the banks will be the first to want to claw that money back if you don't need it. The last thing I had some discussions with people around the SEBA as a reminder that SEBA is to be used for expenses. It's not to be paid on loans. It's not for the owner to pull money out of the company, their shareholder loans and stuff like that. So make sure you're paying down expenses. I remember, 8 weeks ago, we'd have these discussions going, you got the $40,000. If the shareholder took it out as a dividend, is that paying back a loan? Is that abusive? Arguably 8 weeks ago, the answer would have been yes. But since the SEBA has opened up to say that, someone who takes dividends from the company, it qualifies as expenses, arguably if you take that SEBA and you're paying yourself and it's consistent with what you were doing before, you'll be fine.
For sure.
Yeah. Are there any questions for myself or for Eric? Well, okay then. If that's it, that's all we have this week. We want to keep it short and sweet. And we'll decide probably by next Wednesday whether we'll have another coffee chat next Friday, depending on what comes out. But here it's going to be hot this weekend. Enjoy yourselves out there. If you have any taxes, get them in. And see you next week. Thanks, Eric.
Thank you, John.
Have a great weekend.
You too.